Parker, we're already recording. We're going for it. You can't hear us?
This is why we don't hit record straight away.
Well, I'm trying to put the pressure on Parker here. How about now? This is no, this isn't working out, Lauren.
Hey, try to speak.
Yeah, I hear you now.
Uh, Okay, I hear you too.
All right, cool. All right, we are recording. We're going straight
Ready to
in.
go.
Ready?
Yeah,
Yeah,
right,
straight,
right on
straight.
time.
Let's go. Let's go. So, Lauren, you going to kick off this first question for Parker?
Yeah, so I was talking to my dad about questions, and then he said you should ask him how many push-ups you've done today. And I was like, why? Because that was a bit random. And he said, because Bitcoin is trying to do push-ups for like 100 push-ups a day. And so why Bitcoin is trying to do 100 push-ups a day?
So I have done zero push-ups today. I did go on a morning walk, so I got some sun, but I really don't know. I think Steve Barber has started to founder and CEO of Upstream Data has started to announce to the world that he's doing 100 push-ups every day until the Bitcoin halving. I think it's just for the meme value as well as it's generally good to be fit. I did go work out 2 days ago in the gym, went to CrossFit with Jimmy Song and Will Cole. And so I'm usually sore for a few days after that. So, that's how I get my equivalent of 100 push-ups in every day.
100 push-ups a day until 100K is the meme, Lauren.
Is that is that
Oh,
is
Yeah,
that it?
that's it.
I thought maybe to the halving. So,
Well, it could
yes.
be. That also could be, right? We don't know when 100K is coming. Was that another question for Parker?
um,
We don't do price predictions on the show, Lauren.
no. But I have another
Yeah,
question.
go on.
What is the difference between Bitcoin and the blockchain?
Ooh, that is that we're going to talk about that at length today, aren't we, Daniel?
We were.
Okay,
Well, first of all, you got to do the 13 year
I'll
old answer.
I'll give you the 13-year-old answer. What I would say is that um, Bitcoin and its blockchain are dependent on each other, and that neither would be of value without each other. And that ultimately, what it is at a technical level is helping to order all Bitcoin transactions that have ever happened, which serves the purpose of allowing Bitcoin to function without needing a third party. But it doesn't just work on its own, it can only work in concert with Bitcoin, the money.
All right. Did you have any other questions?
Um,
No?
no,
Okay.
I think it's good.
Good.
Thank you.
Excellent.
Yeah, bye-bye. Thank you.
Great to see you, Lauren.
Yeah, good to see you too.
All right, Parker. Yes, I did want to talk about that at length because I think it's important for the plebs to be armed to sharpen their tools as we're going to this next hump season, for one of a better term, because that's one of the first things that people still say after all of these years. Oh yeah, the Bitcoin's great and all, but like I believe in the underlying technology, blockchain and blockchain.
Yeah,
That's the real thing here.
that's almost exactly what Jamie Dimon said. Or whenever Jamie Dimon, CEO of JP Morgan, is asked the question, he'll go one further and say Bitcoin is a pet rock or a fraud, but I'm not saying that the underlying technology blockchain isn't valuable and that we're using it. And so I think it originates from one, a position of lack of understanding, but then it has become an intellectually safe position to take because you don't want to look, quote, ignorant while still not understanding.
Yeah, exactly. It's just a really easy thing for people to say to make it look as though they're well read on the blockchain technology. And if only you were to understand and see what I've seen, and I understand that we can put bananas on the blockchain and, all of this kind of other nonsense that we've had in the past. But yet here we are, 2024, still having the same discussion. And I wanted to bring you on to do a deep dive into that one specific topic, to arm the plebs with something that they can use when they're down the pub or family gatherings, when they come up against this, and be more eloquent in their delivery and help orange pill their friends. And I heard you on, whose show was it? Maybe Preston's, one of the recent ones that you've done. And you were talking about the book, your book that you've got released. And I think the question was, what was the hardest chapter? And you said this one. So why? Considering you'd already written an article about this many moons ago, you'd think it's just copy paste into the chapter, right? But clearly not.
Yeah, and I think my response to that was probably, one, the collective work of, when I originally wrote it, but then also refining it. And it's probably, I think I mentioned it in a separate podcast, but it's probably the one that I'm maybe most proud of, because I think it was the hardest. And it's also the hardest for people to see through. But then once somebody starts to get this idea of Bitcoin, not blockchain, but realistically how to think about that in layers, it's actually at a technical level what helps more than anything else cause the noise to subside. The noise of 1,000 cryptocurrencies or the noise of 1,000 blockchain projects and all the jargon that it is hard for someone to wrap their head around why Bitcoin is the innovation, not blockchain, or realistically why blockchain was one part of a very complicated solution that allowed Bitcoin to work. And if somebody can work through that in a logically ordered way, not only does Bitcoin start to make more sense, but everything therein and around it can start to subside. The noise can start to subside. So I think it's kind of it's a really fundamental one too. So some people might read the title of Bitcoin, not blockchain, and think that it's just raging against all the charlatans and snake oil salesmen in the crypto bro world. But really, it's trying to help people understand this, what a blockchain is, what purpose it solves in Bitcoin, and then ultimately why, for reasons really bigger than Bitcoin, why a blockchain can only be viable in the context of money and derivatively in the context of Bitcoin.
So that's a great place to kind of jump off then. What was it trying to solve? And this is what, like, the first paragraph almost of your article. And I'm hoping you're coming to Madeira so I can get my hands on a copy of the book and have it signed by you personally. Yes or no?
We'll talk about that later.
Okay.
I would like to. The travel arrangements with other things I have around make it complicated. Let's just say
Okay.
that.
So I'm gonna use the original article as the as my basis on how we're gonna go through the conversation.
Yeah.
So yeah, like, as you bring up right at the beginning, why was it ever invented? What was the core reason, and what was Satoshi trying to solve? And then we can build up from there. So yeah, if you want to go with that.
Okay. So I'll answer that, but I reread the chapter this morning over my morning coffee,
Okay.
preparing for this,
All right.
just to refresh everything. And I thought about, this is a hard one for somebody. It's like, one, definitely buy the book rather than Suddenly, not you, Daniel, but the person listening to this, because if you want to get to the bottom of this chapter, if this is something you've been struggling with about why Bitcoin, not other cryptocurrencies, or why Bitcoin, not blockchain, it's like, you really got to study this chapter. So I'm going to do my best to hit the high levels. But before I explain that, which gets into a layer, I start people with, there are two highest level assumptions to help distill this. And then the specific answer to your question starts to unpackage one of those two principles. But the two principles are, first, that money converges to one. Okay. So kind of hold that in your mind. And when I mean that money converges to one, it is that economic systems converge on one form of money. And economic systems do that for very fundamental reasons, non-coincidentally. And that it is that money solves a problem of trade. And I have to have the form of money you're willing to accept. And part of your willingness to accept my form of money is an intersubjective evaluation of what other people are going to accept. So it's an objective evaluation of all the goods in the market, but because it's solving the problem of trade, which is inherently intersubjective in terms of exchange between two people, but then onto the third person, fourth person, and that problem of exchange is really identical between all people in the world, which is why money converges to one. So hold that. And then one last idea there, it's, the idea to help this resonate is it's not a coincidence that every person in your local economy trades with the same one currency. That's not a coincidence. It's not a coincidence that the world previously converged on one form of money, which was gold, the gold standard. That neither of those two things are coincidence. So the world converges and economic systems, all local economies converge on one form of money for very fundamental reasons. So hold that idea as one principle. Second principle is that a blockchain is only viable in the context of money, in the application of money. And we'll get into that, why it's only viable in the context of money, because it's critical to helping this noise of crypto and noise of blockchain subside. But if you go through the thought exercise and assume it were true, not to, there's a saying in Bitcoin, verify, don't trust. But if you're trying to work through this from a logic and reason perspective, if it were true that money does converge to one, and if it were true that a blockchain is only useful, only a utility in the application of money, then the answer would be that only one blockchain is of value. And if money converges to one and Bitcoin has a finite supply, then only Bitcoin's blockchain is viable or valuable. So as we talk about these other building blocks, it's important for people to keep those two highest level ideas intact, because they are what anchor people. The world converges on one form of money. We only need one form of money to trade. And a blockchain is only viable or valuable as a tool in the application of money. So now getting to your question, which is what problem was a blockchain actually intended to solve? And that's where I tell people to recognize that it was an invention or an idea or a construct natively created by the person who created Bitcoin to solve a problem specific to the application of money. And that specific problem at a substantive level was, how do I eliminate a trusted third party from this equation of a combination of issuing currency and validating currency? What is and isn't a valid Bitcoin? How do I determine how to issue it? Who gets it originally? And then how do I validate when it's transferred, whether, if I sent the same Bitcoin to two different people, eliminating that problem of double spending of a unit of the currency. And so when you start from that perspective of, okay, well, now what does that mean? You have to understand a little bit about what, quote, the blockchain is. And really what it is a system in Bitcoin to order currency transactions, to know what potentially happened, or not potentially, but with certainty, what happened first, so that you can then determine if someone's trying to spend a unit of the currency twice, which record is actually valid, and therefore what future money can be spent versus can't. And so, and then when you think about it, that, oftentimes people think of Bitcoin's blockchain as this, kind of public town square. But in reality, every Bitcoin node is aggregating and maintaining their own version of the history of Bitcoin's, aggregate transaction history, which is usually colloquially described as its blockchain. And so there really is no quote blockchain. It's just each individual node on the Bitcoin network aggregating their own history, and everyone's able to come to the same consistent state of ownership because everyone follows the same consistent rules. But what the blockchain actually is the ordering system to know what transactions happened when in Bitcoin, to necessarily know what happened first, so that then whenever somebody's trying to spend Bitcoin in the future, they can do that and people can know whether or not it's a valid Bitcoin transaction.
Right. Okay, mate. So much to go on in there. And this is why it's such a difficult topic and difficult chapter, right? So the naysayer, this is where the naysayer is going to come in and say, well, why money, Parker? Why is it only viable for money? Because we have all of these other things that we could put on the blockchain, and we've seen it, right? We've seen it come and we've seen it go. So why is money the only viable application on a blockchain?
Yeah, so I'll use an example and then I'll come back to the fundamental reason. So if we're anchoring to these two ideas, money converges to one, and the only viable or valuable application of a blockchain is in money, that a key, when I talk about what the blockchain is and this ordering of transactions and why that's important, say I send Bitcoin to you for your car, okay? And then say that transaction is validated by the network. I then receive title to your car and I take physical possession of your car. If somehow that record keeping system was not immutable, was not, or to say that it was subject to change, then there's a scenario where I could get my money back, but I have physical possession of the car. So immutability is a really critical, I like to say a blockchain is only valuable in the context of money, but what it's doing is keeping a set of records and really keeping a set of records of who owns all the currency at any point in time. And immutability of those records is so important. And it's not just so important. The viability of the currency is dependent upon the records being both reliable and immutable. And such that if I paid you Bitcoin, you gave me your car, and then the transaction records changed and I got my Bitcoin back, I'd be in a scenario where I have both my money and your car and you would have neither. A currency system is not functional in that world. Well, a blockchain is not, and the records of it are not secure, and secure translates to immutable. Like, for the records to be secure, they must be reliably immutable, not susceptible to arbitrary change. Well, that doesn't just happen by magic. The fact that people are passing transactions. It happens because there's this process in Bitcoin, not solely this mining process, but the mining process, which is its security function, which is basically how new Bitcoin blocks are added to the quote blockchain, or new transactions or changes to the ownership record are appended to the latest point of history. And in return for security, in return for all these energy resources that are actually being expended, which make Bitcoin's historical records difficult / impossible to change, you have to have a currency native to the network to pay for the security. And that is where this idea that it's only viable in the context of money comes in, because the records and the immutability of those records, and thinking about, again, I pay you for your car, can't have the possibility for me both to end up with my money and your car. Currency system would not be viable. That is why immutability is important. But immutability only happens because there's this currency system to pay on a trustless basis for the security, for how the transaction, when I send you a Bitcoin, to be logged in the chain by everyone in the network, and then to have this broader mechanism in place that ensures that that record can't change. And that only happens because this real world energy expenditure makes it very difficult to change past records once Bitcoin's history is actually written in terms of its validity. Now, there's this other key component. So immutability is important, but the only way that you get immutability is not by magic software. It's because there's energy resources, and there's this proof of work mining system that can't be co-opted by any miners. It is this second key component, which is that a blockchain doesn't just track, or in Bitcoin's context, it doesn't just track ownership. It also enforces ownership. And that distinction is where this idea that it's only viable in the context of money, thinking, one, you have to have a form of money that is native to the network to pay for security. Why do you need security? Because immutability is important. But that idea of immutability, when I talk about, like, someone can think about, it's like, okay, I'm tracking with you that if the records could change, that wouldn't be valuable. Well, immutability also equals enforcement. So when I send you a Bitcoin, the network is checking, is that a valid Bitcoin or not? Has it previously been spent? And did it arise from a block that is consistent with Bitcoin's fixed supply of 21 million? It has to check both of those boxes in order to be valid. But then it enforces validity. So once you have the Bitcoin and the rest of the network has said, yes, that was a valid Bitcoin transaction, now Daniel and only Daniel can spend that Bitcoin. That it's validating, validity of a Bitcoin transaction, but then it's enforcing ownership. If a blockchain cannot do both, its records are inherently insecure and susceptible to change. So how do you ensure that? Well, you have to have the currency itself to pay for the security. And so when you start to think that in the application of other things, common ones that people like to focus in on are real estate, right? Mm-hmm. Well, a database, quote, that was trying to mimic Bitcoin's native blockchain could track ownership, but it can't enforce ownership of the real estate, right? And it also has this problem of real estate's not money. So it's going to need some form of money to pay somebody to secure a record. But if you get back to this idea that the blockchain was only one critical component to eliminate trust of a third party in the context of money, basically you have to introduce trust, or you need to use Bitcoin, and then you're trusting Bitcoin, right? And these two systems are separate. So on that money side, it's, immutability of the records is important. You don't get immutability for nothing. You have to have a currency to pay for it. And if that record keeping system, which is Bitcoin, the closed loop system, it doesn't know anything other than what is and isn't a Bitcoin. And it both validates what's a Bitcoin and enforces who can then send it on. If a blockchain can't do both, it breaks down. And then it becomes dependent on trust. And if it's dependent on trust, then you might as well have just had a database run by a trusted third party, because from a cost perspective, it's way cheaper. So if you need the element of trust anyways, which you do, because that process of real estate can't be enforced by a blockchain. Some squatter could be on that land with a gun. The state enforces the law, that type of idea. And if you start to take that into any other context other than money, it's true. Only in Bitcoin can it track ownership and enforce ownership. If a blockchain can't do both, its records are inherently insecure, and therefore it doesn't work.
Another classic example, and one I fell for when I was, first entering into the Bitcoin rabbit hole and whatever else. And I remember, I think it was like an article in The Economist or something. I think I read on a plane or at an airport or something. And it was about like shipping and having like the cargo container ships put on the blockchain, right? This is going to change everything. This is going to make sure that there is nothing lost in like dodgy dealings at customs ports and whatever else, because it'll all be on the blockchain and we'll know where everything is. And the other example they were using was like tracking where like a virus might be tracked back to some bad food or something. Where did they come from? Oh, well, we will just look on the blockchain where that bunch of bananas came from, or where that pork came from. So yeah, what would you say to those people that still have that in their head? I know you've just explained it perfectly. If you just want to use the same analogy but with shipping rather than real estate, the way I understand it, what you're saying is, well, it doesn't matter. It's pointless because you don't have the currency there to enforce and validate.
Yeah, that's part of it. But then if you think about shipping, box gets off ship at port, okay? Money is handed off for that. What prevents the record from being secure? How do you know that the box actually got off the ship? What is the mechanism that allows you to rely on the integrity of that? Right. And so the point that I would make for people is, and I think it's probably too hard for us to endeavor in this conversation. That's why, go buy the book and study this chapter, that you have to have some humility when you approach this, of really study how Bitcoin enforces ownership, of why a Bitcoin transaction is immutable. And if you can start to understand the inputs and how complicated that problem was, and that it's critical, and Bitcoin wouldn't work if it could both validate ownership, track ownership, and enforce ownership, then take that foundation and extend it to these problems, right? Because when you think about Bitcoin as a closed loop system, if I send a Bitcoin to you, think about this idea that the Bitcoin network has no understanding of who I am, Parker Lewis, or who you are, Daniel Prince. All it's doing is saying, is this a valid Bitcoin, and is it transferring from this address to that address, and is it transferring consistent with the rules? It has no context of the other side of a value transfer, right? But that the reason why that record is secure is that somebody is consuming real world energy resources to make sure that once a record is in place, it can't be rolled back. And that person that's securing the Bitcoin network, the Bitcoin miner, it's getting paid trustlessly too. The money, as I'm sending you Bitcoin, is also going to somewhere else in the world. That idea that if they perform the work, it's trustless. Don't have to rely on anybody, any other man's word, any other judge, jury. It's like the Bitcoin will go to them. So if you think about that and you really study that, the importance of that property and how it actually happens, that the money transfer is actually critical to it. Well, think about the ship. What is it that's actually securing so that when you look up the record in your system, that you can reliably know the physical thing that exists in the physical world is actually in the place where the system says it is? That in theory, the only way that database gets secured is because they're being paid money to secure it. But if money converges to one, which sits outside of this, then it's not going to be a form of money that's native to your bananas or your shipping company, because you have to be able to trade with other people and think about that fundamental question. So then it would be some other currency. But then also, that currency system, Bitcoin, doesn't know about your ships. In order for it to be secure, it really can't. And so then if you start to accept that, then you're like, well, the best way to know whether or not the ship really dropped it off is by introducing trust. Well, if I need to introduce trust, but Bitcoin's blockchain was only a value to eliminate the need for trust, well, I don't need a blockchain because it's just a overly redundant system that only works in the context of money. So I think that it's kind of a cop out, but it's like really study the mechanism that makes this process of Bitcoin's transaction sending between people. And once people on the other side of the world and people all over the world can do this simultaneously, and that transactions can't be rolled back. If you understand that at an intuitive level, and then think about the problem with those same building blocks that allow it to happen, it will become very clear that, yeah, you can track ownership, but you can't really rely on it. And if you wanted to be able to rely on it, you're not going to be able to rely on it trustlessly. You're going to need to introduce a trusted third party. And once you do that, then the whole point of why a blockchain existed in the first place of Bitcoin no longer transfers to the nature of your problem.
And I love your little diagram in the article. I hope you kept it in the book as well. It is very easy to describe. So, how to decide if you need a blockchain? First question: do you need digital cash? Yes. Use Bitcoin, the only blockchain that works. No, you don't need a blockchain.
Yeah, and I will say, as properly sourced, that came straight out of the Bitcoin standard. Right. So credit to Safe, and then I help kind of build the logic around, for people. But it really does start with that, understanding Bitcoin is not linear, and I think people have to get that. Like, there is this very ordered reason and logic, but you do need to be holding multiple ideas kind of suspended in midair at once in order to connect it. And so when people are kind of zeroing in on these more lower level building blocks as to how Bitcoin works at a technical level, and why it only works having a currency that has a fixed supply, that if they have in the back of their head some of these other higher level ideas, like money converges to one, because if somebody goes through that process first, is like, let me see if I believe this assumption. Let me challenge this logic that money converges to one. Okay, I've challenged it and say that I come to the conclusion that I agree that money converges to one for very fundamental reasons because it's tied to trade. So now I can check that one off, and I can always anchor back to that as a something I believe to be objectively true. And I'm not saying everyone comes to that same conclusion, but that becomes something that you can check the box on as to whether you either do or don't. But there are objective realities in the world, and I'm saying that's an objective truth in the world. The other one that comes that is harder is like, okay, well, this person has said that a blockchain is only valuable or viable in the context of money. I'm going to not accept that's now the problem that I'm trying to evaluate as part of this hierarchical logic. I'm not going to accept that it's true, but there's an idea that's been put forward, and now I'm going to look for the reasons that it's true, or look for the counter arguments for why it's not true. But if I've already accepted that money converges to one, that then as I'm evaluating this problem of immutability, why it's important to Bitcoin, how Bitcoin both tracks and validates, and then extend it to others, if I do come back to the problem, it's like, oh, I get it. A blockchain is only viable in money. And if I put those two things together, then it's only viable in the context of Bitcoin. And so it is important to have these kind of higher level ideas anchored as you start to go down to lower level building blocks, like how does Bitcoin do it? And then what is the consequence of that to something else?
And this is where I want to try and help the plebs out and I don't ever recommend arguing with shitcoiners because it's a pointless endeavor. But there are people out there that will turn around and say, oh yeah, but Ethereum does the same and it's better, or Solana or Monero or whatever, name XYZ, or NFTs. That can you explain why? Can you give the pleb a one-liner as to why they are not to be even considered?
I would come back to the same two hierarchical top line points. I would say, regardless of whether or not somebody says their thing, some people say, as an example, Ethereum, it's not money, it's a global computer, and it does a lot more than just money. It's like, well, if a good is only valuable in exchange, if it doesn't have a legal claim on a productive asset, like a stock or a bond does. A stock has the claim on equity of a business that owns physical assets that produce income. So, not money. A bond has a claim to an income stream on some entity's assets or cash flow. Not, both a stock and a bond are instruments that have interest in real world assets to generate money. So not money. But if a goods only utility is in exchange for other goods and services, it has to compete with every other form of money for every exchange. And it will only store value based on the credibility of its monetary properties. So regardless of what someone says, cryptocurrency XYZ, it doesn't have to be money to work. But if you apply that test, is it only valuable in exchange for other things, or does it have a claim on an income stream of a productive asset? And if the answer is no, then it has to compete as money. And then if you come back to this idea of, well, if I've already challenged the idea that money converges to one, then I'm out there looking to see, well, what's the best form of money, right? And so it helps to eliminate that noise to say, like, I don't care what you're saying. I know an Ethereum is only good in exchange. I know whatever cryptocurrency XYZ, it's only good in exchange. Therefore, it has to compete as money. It's competing with the dollar, euro, yen, gold just as much as Bitcoin, but it's competing with all of them. And if money converges to one, there's going to be one winner, and it doesn't converge to one by random chance or by coincidence. It does so for objective reasons. And then you get in and say, okay, well, if money converges to one, and if Bitcoin does have a fixed supply, and I've gone through the endeavor to understand how that happens, then Bitcoin obsoletes all those other things because money does converge to one and Bitcoin has a fixed supply, which is the most important property of money, that it's finitely scarce. So it's kind of it's a logically ordered framework, but it all comes back to, well, if money converges to one of these things have to be money in order to be viable, then I can then evaluate one versus the other, because only one's going to win. And then you can get into each one of those and understand why they're centralized and don't actually work. But
there's
the
other point, right? Like the trusted third party point, and the trusted third party being like the WizKid founder that pre-mined himself or herself a bunch of tokens before they even launched this thing.
But more reasonably, and I do this to kind of it's like a psycho analysis of the person who says that.
Right.
If someone's listening to this and I'm explaining that money converges to one, a blockchain is only viable in the context of money, there's a cross section of people that are probably listening to this that have already convinced themselves that the valuable thing is blockchain, and that when they put it with their money that they've made up, that their thing's actually valuable and it's different than Bitcoin and it's better. But if, when I'm making this point or making this argument, if the thing that they are saying to themselves, that's wrong, and trying to find the reasons, they're not actually trying to evaluate whether or not the argument holds together. Their mind's actually shutting off when it's like a triggering response to not listen to the actual arguments, but to find the reasons why it's wrong. You're not actually listening to the building blocks. You're not actually challenging the underlying assumptions. And so what I what I go back and I tell people is challenge, like to kind of put that triggering, immediate convulsion aside, that it's anathema to you because you've already, told yourself that you're going to make money doing something else. Like you should be more interested in actually figuring out whether you're right or wrong, rather than, the equivalent of the child who's playing hide and seek and covers their eyes and sits in the corner. Everyone can see them, but they don't realize it. That you will be exposed, and that the path to like set the triggering feeling aside to someone saying that you're wrong, and go through the process of actually trying to understand how Bitcoin works at a technical or molecular atomic level around the idea of immutability, of that idea of when I send a Bitcoin transaction to you, there's no takebacks, and how the entire world can operate in unison, because it's very fundamental. And if you get into the different economic incentives that cause that to happen without the need for trust, and that can be done to such a certainty that people can trade real world value for it with reliable final settlement, then you will come back to a prior bias that you formed and be able to challenge it with greater independence and clarity, basically.
And it's beautiful when that firework goes off in your mind. I remember it happened to me, and many people listening, I hope it's already happened to you. For those it hasn't happened to yet, please keep digging. And one of my favorite sayings in the space is, I came for the money, stayed for the money. Because when you understand what money is and you understand what you've been saying, money converges to one, you're like, oh shit, I found it. This is it. This is literally it. This is going to be the money for the next however many generations.
Yeah, and I think that is it's something that also I believe people can more reasonably take a step back from, in terms of a position they might have wed themselves to because they convinced themselves that they were going to make money through some idea, that it's not tied to Bitcoin. It's this idea that the world and, each local economy, but then when you add up all local economies, this idea that local economies converge on one form of money, it shouldn't be emotional. It's just, well, let me see, let me evaluate history, and then let me think about the fundamental reasons why that either does or doesn't happen. Because if somebody arrives at that point, then that's what arms them to challenge everything against. It's like, well, does this, if I'm coming to a different conclusion, does it stand in opposition to another more fundamental fact that I've already accepted? Because an example of that would be somebody's going through this evaluation. Is a blockchain only viable in the context of money? And they might own 10 cryptocurrencies. And they might not want that to be true because they thought that theirs was going to moon or whatever. And so they start to figure out, they're like, okay, yeah, I can start to see why a blockchain is only viable in the context of money, when I started to think about what its actual role in this equation is. But then they say, but money doesn't converge to one. So yeah, maybe a blockchain is only viable as money, but many can work. But if they've previously evaluated that higher level question of does money converge to one, independent of the word blockchain or the word Bitcoin or the word gold or the word dollar, and they've accepted that for fundamental economic reasons that happens by necessity, then they're their own. They're not listening to somebody else to say, is that person, is what they're saying true or false? They've developed a logical order for their own self to test it against. And they can know, well, I can tell myself now that money doesn't converge to one, but I previously believed that. Am I rationalizing something that I want to be true that isn't true? The idea that there could be multiple blockchains that work, And so I do think that it is very hierarchical, and there's things that are more emotional or more subject to biases than others. And when I talk about evaluating, kind of going from the high level, but then going to the lower level building blocks, it is the idea is like, is the record really only valuable in the context of Bitcoin because it's immutable? Okay, well, how does immutability happen? And then the idea of, if a blockchain cannot both track ownership and enforce ownership and really understand what that enforcement means, do I agree with that? Those are the lower level building blocks of assumptions to test, because if people challenge those with their own reason, their own logic, but then ultimately agree with them, when they start to come back up to meet in the middle of like the high level ideas to the mid level ideas, then they're walking themselves, they're the horse walking themselves to water.
And I think probably the best place to leave this conversation would be just to clarify for people the difference between capital B Bitcoin and lowercase b Bitcoin.
I generally don't like to distinguish.
Okay.
I like to think of it as, there's a currency system, and neither of them are relevant without each other. That Bitcoin's monetary, the ability to send Bitcoin across the world to every possible nook and cranny, to anybody who wants to opt in, the money is only valuable because there's this underlying network, and the network's only valuable because there's this currency system, and they build, and the currency builds and grows in value. It's the same idea of like, there's no Bitcoin without its blockchain. There's no blockchain without its Bitcoin. They're interdependent on each other. The immutability of the records is only relevant and only possible because there's a form of money that's finite in supply that allows all of these other incentives to fall in place. But that currency is only also immutable and finite in supply because there's this record keeping system. So I would say that that it's all one and the same. There's certainly components to it, but for people that are new, there's rails and there's currency to move along the rails. And what good would the rails be if you don't have trains?
Right.
And in this context, the train's Bitcoin.
All right. Yeah. Perfect. Nice analogy. All right, mate. Well, I hope that's helped a lot of people get up to speed on, batting back some of those arguments. The other thing I wanted to talk to you about and have you on the show about is talking about what you're building, since I know you parted way with Unchained. I think you're still in contact with the guys, but now you're helping build out Zaprite as partner to John, who's already been on the show. So why don't you take us through that journey? Last I knew, a few months ago, Parke'r was Mr. Unchained, doing his thing.
Yeah.
Had been there many, many years. You're well known for it. Your whole blog series was on the Unchained Capital blog there. Yeah, get us up to speed. What's been going on the last 18 months or so?
All right. Well, so let me start with when I first got orange pilled, when I first figured out why Bitcoin was money, it was kind of in part and parcel to figuring out that the money was broken. They were always going to have to print more dollars. Okay. So I started at the perspective of Bitcoin was a solution to the dollar, but more realistically, it was a solution to the euro, the yen, gold, every form of money that existed. And that I couldn't have understood Bitcoin in a vacuum. But if I started to look at the problem of, okay, Bitcoin is money and Bitcoin is valuable because it has this finite supply of 21 million, then the most important project I viewed to work on at that point in time, which was 2016, 2017, was custody. And the way that I relate that to people is Bitcoin's finite supply is not of value to you, one, if you don't understand it, so that's education, knowledge, that's my book and helping people understand Bitcoin. But then if you had something that was finitely scarce but you lost it, and Bitcoin increased in purchasing power from the equivalent of 1,000 US dollars to 40,000 US dollars, but either you lost a key to it or you put it on FTX or some other scamming site and lost your Bitcoin, Bitcoin might have maintained its purchasing power, but it didn't store value for you. So I viewed it, Bitcoin as money. The most important first derivative service to offer that's important to every holder of that currency is custody, or safekeeping of the assets. So that's really what we focused on at Unchain, and did that in a way where people could hold their keys to their Bitcoin. I'm still a client of Unchain, still a big supporter of Unchain. I work down the hall at the Bitcoin Commons, so I could literally throw a stone down the hall and hit Unchain's door if I wanted to. But they're right down the hall, and whenever I'm needed or they need me, I'm there to help. But I stepped back from Unchain in November of 2022, and that had been kind of a culmination of kind of probably discussing a transition for 6 months. So it was not something that was sudden. And one of the reasons was I wanted to actually complete my book, and it was something that I had been working on for really 18 months on and off after I had written the bulk of the content. And there was just a reality that I was never going to finish that book while I was an executive working full-time at Unchain. And so I wanted to step back, and then there were other things that I had started to, wanting to be able to contribute to Bitcoin in more ways than one. And so when I first stepped back from Unchain, it was with the intention to finish Graduate and Suddenly, the book, which everyone should go buy at thesafehouse.com, Safe Dean's website. But in part of doing that, I had kind of an urge to write something new too. And the book was new, but just kind of wanted to get back in the flow of writing. And as I did that, I wanted to set up a way to receive Bitcoin as payment on my website. And when I was doing that, that is when I started looking around at all the tools and realizing that what I thought should exist didn't exist, or at least it didn't exist to the way that I wanted it to. I wanted to quickly drop in an XPub to a website, connect to Lightning Wallet, and not have to worry about web development or running servers. And so the more that I had, thought about that problem, I solved it in an interim basis, but it got me to thinking about Bitcoin payments. And I oversimplify the Bitcoin landscape. I like to think you can mine Bitcoin, you can custody Bitcoin and safekeep it and hold it, and then payments, how you transfer it. And so it got me to thinking a lot more about the payment side of Bitcoin, which is ultimately what led me to Zaprite. But then it was kind of already starting to think about solving a problem for myself of how am I going to receive Bitcoin as payment, which I was also looking forward to, in terms of when my book would ultimately be released, because I wanted to be able to be paid in Bitcoin. And then in March of last year, March of 2023, there were a slew of bank failures in the US. So Silicon Valley Bank failed, First Republic failed. Whether it failed or not, Signature Bank was taken to the woodshed and executed, and ultimately Silvergate as well. But Silvergate was the one bank in America, and I always like to reference, that was able to actually return all deposits despite 100% bank run effectively. So it's actually remarkable that those guys at Silvergate didn't require bailout, were never taken over by the FDIC, and built their business in such a way that the equity holders lost, but the people that deposited their cash in that bank didn't. So, but when that happened,
and to add to that, don't forget our side of the pond, we had Credit Suisse go under.
Oh, Credit Suisse, yeah,
it's mad. Like mad. People forget this went down, mate. It's madness.
Yeah. But when those banks failed, it really, in my mind, kind of had a renewed focus of urgency around, kind of this idea of what would you build if reliable access to your U.S. bank or to the U.S. banking system was no longer reliable. could no longer be assumed, because I think what is well understood for people who I would label as Bitcoiners, and I use the term loosely, not from a purity standpoint, but somebody who's been able to logically order for themselves why Bitcoin is money and why everyone in the world is going to have to adopt Bitcoin. That they quickly kind of gravitate away from a centralized third party to hold their money for a good reason. Kind of the not your keys, not your Bitcoin. But ultimately, it's a way to custody Bitcoin without counterparty risk. That's really what Unchained focus on, but doing it in a way where people can have multiple keys and Unchained has one. They've since expanded to multi-institution custody, which is something we've actually done for a long time, but only in the context of loans. But this idea of minimizing counterparty risk in a single third party. And they think, and most people think about that from a balance sheet perspective, from a backwards looking way of, this is my current savings, and I don't want to have an institution like a BlockFi go down and me lose my Bitcoin, or institution like it's hard to call FTX an institution, but a third party like FTX go down, or potentially a third party like one of the 20 largest banks in the United States that has 200 billion in deposits, like Silicon Valley Bank or First Republic, or however many deposits Credit Suisse had, probably in the mid hundreds of billions, right? I don't know what I know that First Republic and Silicon Valley Bank were somewhere between 175 billion and 200 billion. That's a lot of effing money. Well, the first thing someone thinks about is their savings. How am I going to make payroll? But that it's really just a single point of failure for everything. It's also the single pipe of when you're receiving dollars, where the money is going to. It's your point of access to get savings. So when I was, 12 to 18 months ago, working on my book, thinking about how to get paid in Bitcoin, seeing these bank failures, it sharpened my urgency around what would you build, and recognizing that we need to have collectively, as people working on Bitcoin, not everyone needs to do this, but that this idea of Bitcoiners is like, not your keys, not your Bitcoin. You need to diversify yourself away from the fiat pipe as a single point of failure, and that Bitcoin as a payment rail. Again, to that point we were talking before, if you can't exchange it, it's not of value. So the rails and being able to accept Bitcoin as payment in an easy way, such that a normal person running a normal business can say, I can do this without a lot of hand holding. I don't have to become a web developer or a Bitcoin, payments expert myself to be able to receive Bitcoin as payment, but that allows me to do it in a way that I can still hold my keys and Bitcoin can go directly there, and I don't have to have all my money route through another single point of failure, that I can be more directly connected with my customers. That's ultimately what we are building at Zaprite. And so, but it was born out of a very similar problem that, was then sharpened or accelerated when I saw all those bank failures, because I really do think that we're working with less time than most people would think, that those banks evaporated overnight. The system and those same problems that existed then exist now. They're underneath the surface, and they're bubbling to the surface in the process of that, at least. And so I had known John McGill, the founder of Zaprite. He founded Zaprite in Austin, was actually in Ireland at the time. But as we were looking around, because the first instinct is what I want out there. And the short answer was no, but that Zaprite was the closest to the vision. And that the more that Will and I, who also worked with me at Unchained, my friend from growing up in Austin from preschool on, who helped me understand Bitcoin in the first place, we were looking all around, because you might have a bias to think, hey, this isn't there, and so I can have the opportunity to build it. But the rational thing to do is just to find the thing that exists that works for you. And if it really doesn't, then to consider building it. And so we recognized that Zaprite was closest to what we wanted to build. And when we say closest, it basically was this idea that you bring your wallet to Zaprite. Zaprite isn't a wallet, and that you can have, however you're already custodying your Bitcoin, plug it in to Zaprite, and Zaprite focuses on the payment experience. So if you're a if you are holding your own keys, you can connect a wallet that has Bitcoin go directly to your wallet, not through Zaprite. If you're not ready to hold your own keys, you can connect a Strike account. We're working on adding more equivalents of Strike and support for different wallets. You can connect an Unchained vault to Zaprite. But the idea being, we're focused on the payment experience. We don't need to be just another intermediary. And we talked to John, this would have been last, probably March, April, about a few things that we would want, built as kind of a key columns of Zaprite, and aligned on those quickly, and then decided ultimately to join in May, and have been working on Zaprite and helping ultimately the problem of getting more businesses in the position to accept Bitcoin as payment, not because it's a novelty, but because it's critical to de-risking their business, but in a way that meets them where they are in terms of how they're already securing their Bitcoin and how they want to be paid, so that we can make the payment experience easier. And if we make the payment experience easier, then 100x the number of businesses are going to be accepting Bitcoin and payments, 1,000x, 10,000x businesses. That's it. You actually have to reduce the barriers to enable more to light up. And so that's really where we're focused on.
And it solves another one of those problems that many of the plebs will come up against when they're out there just trying to orange pill their local bars, cafes, restaurants, or whatever, right? There are even some plebs working with inside big companies that are trying to reach the CEO or the CFO and explain Bitcoin to them. And yeah, you hit this brick wall of, oh, how are we ever going to account for it? How can we invoice for it? And you guys have built that tool. Like it's ready. It's good to go. It's tried, tested. I've been using it. I think it's great. I think it's cool. Like, do you want to kind of rally on that a little bit? Because without these things in place now, Bitcoin bear markets are for building. You guys have built. So when that merchant adoption comes, there is this company that the discerning pleb can point to and say, these guys got you. It's built.
Yeah. So I do think, what I tell people is, I think it's a very logical progression. I think that you need to understand why Bitcoin stores value in order to then possibly be in a position to invest in the infrastructure for your business to be paid in Bitcoin. First, understand the significance of Bitcoin's 21 million fixed supply. First, figure out how you're going to secure that finite asset. Then you say, well, if I convert my fiat to this and it's going to store value better than fiat, then, it is hyper logical or hyper rational to have a direct connection to my customers to be able to pay me rather than choke points and single points of failure. So I do, I tell people, if you're someone out there, don't go, go hand out the Bitcoin Standard or now Gradually and Suddenly, or maybe both, to a business owner and let them do some work. Don't just walk up and have the first conversation be like, you should really accept Bitcoin as payment, because accepting Bitcoin as payment can and is very strategic to your business if you're doing it for the right reasons and you're authentic in doing it, and Bitcoiners will pay you in that world. But if somebody doesn't understand an inkling about Bitcoin, it's actually the wrong thing to do, is starting to tell them to accept Bitcoin as payment. In my view, potentially in some rare instances where cross-border payments are so hard that someone can be like, okay, I'll use Bitcoin as a rail. But I think by and large, it's first start them with education, and then they'll get down to the point of being paid. But for those people who've already started to understand it, then what I tell them is, if you're already accounting for Bitcoin because you're buying it either personally or as a business, it's actually the same problem. People think about Bitcoin payments as harder because they're thinking about individual transactions. And to your point, and I appreciate you bringing it up. One, we have the tools to deal with each one of those individual transactions to record and track the cost basis. At a fundamental reality, though, it's no different than when you decide to buy Bitcoin. You need a way to track it and to account for it. Also, you're not really doing the accounting on you are tracking it, but in terms of entries and systems, you're not, buying and selling as revenues coming in the door. You're not reporting taxes as revenues coming in the door. You're sitting down periodically and doing that. And if you have the tools that provide you with all the information summarized in easy ways, the barrier is actually a lot lower than might be built up in your mind. But ultimately, it's the Bitcoiners that already understand Bitcoin that either are contracting, because we do have invoices. It could be a software developer, it could be a general contractor, it could be a lawyer, anybody that's offering contract services to somebody else, or our payment links to sell goods and services online. And we're starting to build out connections to e-commerce platforms, that we have that same accounting infrastructure for both of those. But it starts with the Bitcoiner saying, like, if not me, then who, right? If I understand why Bitcoin is going to store value over time, if I'm not the person that says pay me in Bitcoin, then why would I expect somebody else to do it? And so really, what we're carrying, not just from a product perspective of making it that much easier to do, and that really will be the engine that lights up more and more businesses to be in a position to accept Bitcoin, or more individuals that are contracting, that it's also kind of just a call to action to say, hey, stop being complacent, because if everybody collectively failed to act and we waited till it was too late, then it's going to be a lot more painful to get the actual payment networks functioning. And so that's ultimately why we're working on it. But we put the businesses and the individuals in place with all the tools to be able to not just technically make it easier, because that's a big part of it, but then on the back end in terms of accounting and record keeping, because it is part and parcel to a business actually making the decision to go forward to say, yeah, pay me in Bitcoin.
Yeah, absolutely. And the flow of it is very simple. You create that template once. If you're making an invoice, people know, like, if they've ever made invoices, it's a pain in the ass. You do that once a month. You sit down, you copy paste, you duplicate, then you put in this, that, and the other thing, and blah blah blah. And it's a pain in the ass, man. So yours is very simple. It just click, brings up what you put in before. It's like tick tick tick. Yes, that's all very good. Thank you very much. Bang, pay me in Bitcoin. And if you're this advanced level, you've got your own hardware wallet plugged in, and you send it out via email. Invoice is gone, and you take over from here, because this is the cool bit. Zaprite tracks what's going on, right?
Yeah. And when you think about that, it's making the tools easy, like basically making the payment templates. And that's what I'm talking when I say payment templates. We focus on invoicing and e-commerce rather than point of sale. And we do that for strategic reasons, because the development for those two payment templates between invoices and e-commerce are very similar from like a payment, how things are actually paid online. But that when somebody is thinking about this problem for themselves or their business, it's okay, it's got to be easy for me to do. It's got to be easy for somebody paying. And then I need to be equipped with all the tools to, process the information. But this key thing that I think that one of the challenges was, there were kind of two extremes where some people anchored to just making it really easy, but then they compromised on allowing Bitcoin to go directly to the people who are most logical to demand Bitcoin payments, which are Bitcoiners. And that it's easy to think, well, say the Bitcoin just came to me, Zaprite, and I made it easy for you to withdraw. You could say, well, they make it easy to withdraw. But those two worlds are night and day. Either there's a direct point between you and your customer, or I've replicated the single point of failure. And that having your customers be in a position to pay you directly allows a lot of magic to happen. One, it allows us as Zaprite not to be a wallet company, because the second that we start touching your funds, we become from a regulatory standpoint, a money transmitter. But then more onerously, we become a wallet company. So now we need to develop all the expertise on our side to create a really secure application for how money both comes in, how the private keys are stored, and then when you're requesting to withdraw, how it goes out to you. Well, if we're a startup trying to solve a problem of Bitcoin payments, the payment experience, and we have to be a wallet too, then all of our resources can't be devoted to the payment experience. So we're going to deliver to you a worse payment experience than we otherwise could. And in reality, you already have a way to secure your Bitcoin in a way that's actually preferable to you. So if we can both take ourselves out of that workflow in terms of the flow of funds, it actually simplifies our business, which allows us to deliver a better product and experience of what we're actually trying to be for you, which is to make Bitcoin payments easy and get Bitcoin directly to you however you want to get that, in your orbit. Hardware wallet, awesome. Non-custodial Lightning node, awesome. Not ready to do that, but grok Bitcoin and want to go to a Strike account, or in the future a Cash App or River, all those, like, you won't have to diligence Zaprite to see whether we're, credible to hold on to your money. You have other institutions to do that to help you exchange. What we are helping you do is most seamless, frictionless way, get Bitcoin directly from your customers, however you want to receive it, and then give you the tools to make that business reporting and accounting as seamless as possible. So you're able to both store your balance sheet in the hardest form of money that's ever existed, as well as to directly receive that as a form of payment, because they are functionally one and the same in terms of the problem. When you're accepting Bitcoin as payment, you're able to directly access your customers as a source of liquidity, and you're able to do that without a single point of failure in terms of a financial flow. And, one of the big ideas I like to think about this is when you're receiving Bitcoin as payment, it's like a DCA, but without a central counterparty. And that access of liquidity and diversifying it, if the currency is a risk and if the currency is devaluing, which it is, then the rails for that currency system are also a risk to your business. And so I think the days are past where people can look at Bitcoin payments as a novelty. They need to start to think about it, especially when I'm talking to Bitcoiners out there that already understand, why Bitcoin, not blockchain, why money converges to one, why Bitcoin is it, why the fixed supply is so important, and how Bitcoin credibly enforces it. Start thinking about, well, the currency system, the rails to get you dollars is just as big of a risk to you as the money itself, because they are one and the same. Their utility to you is interdependent on each other. Start thinking about Bitcoin the same way, and you will start to think about investing in the infrastructure to receive Bitcoin as payment, not as something marginal, but as something critical to the long-term security of your business and to de-risk it. You're de-risking it by getting the better form of money, but you're also de-risking your business by actually connecting to the rails. And when people start to think about it that way, it's like, oh, Silicon Valley Bank, the rails are a single point of failure. Think about the pipe to Silicon Valley Bank. That's a single point of failure. The Fed's gone down, like just in terms of like their software system. The Bitcoin network never goes down. It's the most redundant system. So people can be broadcasting transactions to you, and the Bitcoin, like that hyper redundant system, is the rails that you're accessing when you start to demand Bitcoin as payment to get the Bitcoin more cheaply, more efficiently, but also more securely, because system never goes down. The fiat rails, it's going down. You just don't know when, and you don't know if you're going to be set up on the Bitcoin rails before it does or not.
So for any Bitcoiners listening out there at the moment that are accepting that they've got a product that they're selling, there's absolutely there's no excuse to not use Zaprite at this stage, because it's so easy to use. And if you've got that level of technicality and you've got your own hardware wallet and all it, like it's a no-brainer.
Yeah, I would say that if you are offering contract services for which you invoice or issue business invoices, or you're selling goods and services online, we're still working on, realistically right now, we're not as focused on POS because those hardwares that are in stores have such a dominant position. We'll likely work to incorporate and integrate Zaprite into POS systems that are run by other companies. But right now, given where we're at, I would say that is true for if you're selling anything through, invoicing for services or online, Zaprite's the solution for you. We'll hopefully get there for point of sale as well, but recognizing that I think Bitcoin payments is oftentimes used as one, kind of a generic term for all things, and two, it's confused with being for Lightning. But when in reality, if you're contracting your services as a software developer around the world, or if you're issuing grants, that oftentimes those are large enough for on-chain payments, and that Bitcoin payments, one, means both Lightning and on-chain, but that also, the way that, we're not yet settling oil for Bitcoin. The way that oil will settle for Bitcoin will be different than an e-commerce payment works. So like we're thinking about what are the markets that have people that are most likely to say, yes, I need to start to receive Bitcoin as payment. That's why we're focusing on those two specific payment templates. But everybody should be thinking about it. And the more people that are demanding those services, the more we can accelerate the actually building of them. That it's what makes a market. So we're putting the tools out there, but we do need Bitcoiners to say, yeah, I actually need to take this seriously, and I need to demand those type of services, because that's what actually gives us the capital base to keep, because we can earn it from our customers directly, not from raising outside money to be able to continue to viably deliver a product. But it takes a market, and it takes Bitcoiners to say, yep, we agree. We need to invest in this infrastructure for our business. Show me how this works and where to sign up.
And I'm just looking at Bitbo now, like Bitcoin treasuries, companies reporting Bitcoin holdings. We're up to 71 companies. So at what point do those 71, and with obviously MicroStrategy being one of them, well, at what point do they start needing your services, sending out invoices in Bitcoin?
Well, I would say they need them today, but I mean that's a question. You pull Michael Saylor on to your show, and you ask him, "Hey, why are you not, enabling your customers and all over the world to be able to pay you in Bitcoin? You've made the balance sheet decision." And I think ultimately demonstrating that if you're selling software in a foreign country, and that you don't have to go from Argentine pesos to US dollars to Bitcoin, and however long that process takes, and your exposure to both the local currency in Argentina, or the local currency in Brazil, or the local currency and whatever other dozens of foreign jurisdictions that you're in, that if you just gave those people the ability to pay you for your software directly in Bitcoin, that's what you want, because your balance sheet's in Bitcoin anyway. So I think that it's, and then that would demonstrate the utility of Bitcoin beyond just, a balance sheet asset, even though they are, part and parcel. So I do think that it's just coming around to realizing the calculus that the decision to accept Bitcoin payment is really a balance sheet decision. It's just a point of, how do I get the Bitcoin onto my balance sheet? Is it actually cheaper? Does it actually create efficiencies? And then also to approach it with the same set of urgency and lack of complacency as people treat their balance sheet. Because ultimately you're going to need to use that. And the way that Bitcoin moves is over the Bitcoin network, and only Bitcoin can move over the Bitcoin network. So creating a diversity of liquidity and getting Bitcoin as efficiently as possible when you're selling goods and services becomes hyper rational. I think it's just easier for people to be complacent, to say, hey, we either got more time than I think we do. But somebody like MicroStrategy would be a great bellwether, that they've already recognized why Bitcoin is valuable. They do sell software. They do sell software globally. And they would be a very practical early mover to say, yeah, you don't have to pay me in Bitcoin, but I'm going to give you that option because I understand why it's in my interest to do so.
Yeah, for sure. And I guess the final question here about Zaprite and about what you guys are trying to build here is, you're going to have to make profit. You're a business. What is the model? And you think you've just frozen. Yeah, it looks like it just lost you.